What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible. So without further ado, let the intro roll and I will see you on the charts. Today, I want to speak about gold. Now, why do I want to speak about gold? Because this market is very near to providing to us a good trading opportunity. So obviously, I want to share exactly the situation that we have on it and how we can be looking to capitalize on the next potential move. Now, as usual, I will be keeping the analysis as educational as possible. So first, we will be speaking about the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are doing in the market. So basically what the biggest speculators are doing. The institutions that are in the market to actually make money. Those are the non-commercials. Institutions that are in the market just to make money. And those are the guys that we like to follow because they are the big players of the market. So by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we have the highest probabilities for a nice opportunity on gold. So without further ado, let's get straight into the analysis. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly, we have a market which has just provided a nice M pattern. Now, generally speaking, after an M formation, what you want to see is the market create a move to the upside to go and complete the pattern at the previous support turned resistance. So in this specific case, since the neckline of this M formation is exactly at this zone here, since from here the market has started this move to the upside, this is exactly the previous support, which has now turned resistance, that we do expect the market to test before a possible continuation to the downside. So here on the monthly time frame, what we can expect is a potential move to the upside to go and complete this M formation at the previous support turn resistance, because as I have just explained, that is what you expect from the market after the creation of an M pattern. You expect the completion of the M formation at the neckline. Going down on the weekly time frame, what do we see? Now here on the weekly situation is quite interesting as well. In fact, what we can see here on the weekly is that the market has just provided a nice impulse to the downside. Now after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And if we take our Fibonacci from the high to the low of this impulse, what we can see is that we have a perfect 50% Fibonacci retracement, which at the moment is lining up with this previous support turned resistance, creating a confluence of resistance at this area that we do expect the market to go and test. Because keep in mind that when you have structure that is at the exact same area of a Fibonacci zone, that in that case you have confluence either of support or of resistance. Now in this case, since this 50% is resistance and this is an area of previous support and resistance, this is a confluence of resistance, meaning that if the market will reach this area, there is a good probability of seeing this market getting rejected away from the zone. But anyway, these areas usually act as magnets for the price because they have a lot of liquidity in them, meaning that the market has high probabilities of actually reaching this zone, as we have already identified from a monthly perspective, since this is also the neckline of the M formation that we have previously identified. Going down on the daily time frame, what do we see? Any questions or requests for the next videos, make sure that you leave them down in the comment section below. Also, make sure that you smash that like button and subscribe. Now here on the daily, we can see that before the potential longing opportunity, there is actually a shorting opportunity on gold, which is the most immediate opportunity that we have on it. Now, why there is a potential shorting opportunity? Because here on gold, what we have just created is a nice W formation. And after the creation of a W formation, what you expect is for the market to create a move to the downside, to go and complete the pattern at the previous resistance, now turned support. So here on the daily time frame, what we can actually expect is for this market to create a nice move to the downside, to go and complete the pattern at this previous resistance, turned support, which is the neckline of the pattern itself. Now, if we go and see what we have from an order flow perspective, so commitment of traders, so basically what hedge funds are doing in the market, what we can see is that with the last report, hedge funds have been decreasing their net positioning. In fact, we went from having 257K net positions all the way down, slowly decreasing all the way down to 189K net positions, with 7.5K shorts added with the last report and 18.5K longs getting closed, reaching 265K long positions and 75.8K shorts. So overall on gold, we're seeing a strong decrease of the net positioning, meaning that gold at the moment is actually getting quite weak. So there is definitely the possibility to see this market complete the W formation at least before a possible continuation to the upside. So the most immediate opportunity is a potential shorting opportunity back down to the neckline. And how we will be approaching this potential opportunity with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the directional aspect of the market. But when it comes to confirmations and entries, the best timeframe is the 4 hours. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the upside. Until everything will remain bullish as it is right now, obviously we will not be looking for any kind of shorts because this market will simply continue to the upside and it's never a good idea to be shorting a bullish market. However, if this market will shift from a bullish to a bearish market, at that point, we will be adding gold to our watch list with students. And as soon as the market will provide to us one of our valid entries with students, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to complete this pattern at the neckline. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day, I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering all your questions every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.